I'm going to give you the ultimate order flow strategy that I use every single day to profit on the S&P 500 futures. This is a beginner to advanced breakdown. I'm going to go over my entire strategy and basically how I trade the markets using institutional order flow tools and how I see inside the market and use level 2 data to really see what's going on in the charts. So let's move into these charts now. This software looks complicated. I've made a video on it before, but I promise it's not complicated. Just like everything else in trading when you started, it was all complicated, but you picked it up very quickly. This software is no different. It is not super duper complicated, and I will make a dedicated tutorial, but right now I'm just going to briefly touch on it and just try to stick with me here. But essentially, you're asking, okay, he says order flow. I've seen this stuff before, but what is order flow, right? Well, order flow is not indicators. It's not price action like cosplay. Like it's not, it's real-time buying versus selling. It's telling you who's aggressive and who's passive, who's in control of the market, who is in pain in the market, the buyers or the sellers, right? And the goal using order flow and using these tools is to spot imbalances, to spot absorption, to spot liquidity shifts, to spot intent in these participants before the candle ever shows it. Because a candlestick chart is what's already happened. A candlestick chart is past tense, right? It's already printed. It's already happened. You can't actually see the business that was conducted. It's like watching the scoreboard of a game without actually watching the game. Like you just saw what already happened. You don't get to see what's actually happening, and imagine like, in a football game, I mean, how much of a difference that makes, right? You can see what's happening on the field versus only seeing the scoreboard alone after it's been updated, So we can make far better decisions in our trading using these types of softwares and these types of tools. So the tools that you will need, no more, no less than this, right, is a footprint chart, which I made a video on, and I'll go over it as well. The footprint chart, the volume profile, the liquidity map, this heat map right here, this book map, and just generally these liquidity tools and the platforms that I use. I only use two platforms. I use ATAS order flow software, and I use Bookmap. And you're looking at Bookmap now. And I use CME live. I use CME level 2 data with top of book, and I use DX feed for my ATAS, and I use Bookmap data for my Bookmap. They have their own data. I use that one. So the framework. Let's talk about how the market actually moves, right? So if you think about auction logic, like auction market theory, price moves from value to imbalance, then to value. So when we find a place, we're always seeking value. So let me swap over to this chart right here. You can see I'm going to talk about value real quick. So this is the volume profile, and I use this on a daily basis. You can see here the POC is the point of control, the volume point of control. This is where the highest volume was traded on the session, and this is also where buyers and sellers deem fair value. This is where buyers and sellers can both agree on a price which is fair value. And this is the value area low and value area high. As I said before in another video, this is the 70% range of value inside the session. So inside these two lines is where 70% of the volume was conducted on the session. Now that's important to us because that shows us where value is. Where are these participants agreeing on value? And so anything past the value area low, you would assume is underbought, right? So it's oversold. And then anything above value area high is overbought, right? So it's overextended and then underextended. So there's also two concepts in here that I use. And the first one is low volume nodes, low acceptance zones. And that's like scalpers gold, which is what I do. And then high volume nodes, which are balanced zones, magnets, and I see them like magnets. And so that's where price, like I said, high volume nodes, these areas where price conducted more volume at these higher peaks, like where the POC is on a peak, and these are like peaks and valleys, but these higher peaks are high volume nodes, and then the low volume nodes are these dips in price. So you see it kind of like mountain ranges. So your job is to identify where the market is willing and unwilling to do business. Where is the value in the session, right? And you can use that such an extremely powerful concept to use in your trading instead of just trading at random places, because you could see some random ICT setup up here and you want to take the market long, but you wouldn't know that price is extremely overbought. And you can, I mean, you can even see the RSI is extremely overbought, but that's for later. So my main setup is the low volume node rejection and continuation. And I trade something that's called the institutional defense theory. And so what this theory says is that institutions and big players will step in and move the market like they did here and create an imbalance. And the institutional defense theory is exactly what it sounds like. It's a theory that says that institutions will defend the areas at which they control. And so if you could see in this section here, these big red bubbles are aggressive sellings, aggressive selling, and it's a really aggressive sell here. So you can assume somebody big is dropping this market down, is pushing this thing lower, an institution, right? And so you're going to assume that they want to control this area that they have put a lot of pressure into. They have put a lot of risk on in this area. So they're going to do whatever it takes to defend it. And we want to identify those areas where the institutions are putting their risk on, and we want to follow them when they go to defend it, right? So think about, you've got a king's castle and you've got their guard up front. We want to identify where the king's castle is. We want to watch and wait for them to put up their defense in front of their castle, and then we want to get in with the defense, right? We want to get in with the defense of their castle. So here's an example, but this and this creates an imbalance, right? And so that's the low volume node where price moves so fast that was imbalanced, the value was imbalanced. So and between the buyers and the sellers, it was imbalanced as well. So my bread and butter is the low volume node rejection and continuation. And I scalp those for lower risk to reward ratios, but I can do it multiple times a day unless the one that I'm trading is particularly large, like a big setup, a big institutional defense. Then I'll only take one trade because it's all that I'll need. I'll get a big enough move from it. So my entry logic is exactly price pulls into a low volume node from one direction. And I'm going to go over this actually first, but I'm going to tell you why it works. Low volume nodes represent no liquidity or very little liquidity, these areas of low volume. So if I go back here and show you these areas of low volume, right? Price rejects them aggressively when institutions defend the structure, right? And so that's what we try to capitalize off of. So let's say here, this is our example, right? And we've got this visible range volume profile. So it's just exactly the same as this volume profile here. So you can see it's an area of lower volume conducted. We can also see here the parts of my strategy where we see this big aggressive selling creating large delta outliers here, 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 and here, you know, considering this inside this low volume, there's large deltas. So we know that there are big players, big institutional players in this market today. So if you think that somebody took this market down, what are they going to want to do? They're going to defend it because they put their risk on here, right? They're not going to turn red. Institutions, they're not going to let their positions go red. So we can see here, it's almost like a fair value gap on anabolic steroids. This is what fair value gaps are built off of. I don't agree with the way that the whole ICT trading works. I think it's way too shallow. I just don't think it works. I mean, some people it works for them, but I just think that you're missing 99% of the context. I think you're missing so much value in your trading that you could make it 100 times better, because you could see like I said, you could see a fair value gap up here, but what does it mean? You know, and you don't know where we're going to defend price either here. You don't know if there's a fair value gap here, 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 and candlesticks are time frame based. Candlesticks are fractal, so it doesn't make sense to try to draw something off of a candlestick when it's not accurate, you know, or saying, oh, well, there's liquidity above the high, a lot of liquidity. No, there's not. I mean, there's just no way to know if there's actual passive participants waiting at certain areas. Like, you would not know that there's liquidity sitting right here. You know, you say liquidity is above the highs and lows, and that's false. I mean, it's false most of the time, because in the sense that there's liquidity here, but you would be able to never tell, according to ICC, that there's liquidity here, right? You can see the passive participants. And for example, there's very little liquidity sitting up at the high as opposed to down here. So that's my only point. Anyway, let's move on. So like I was saying, the low volume node is here, the area of low volume. We move through it quickly, create an imbalance, create an area of low volume, right? And then we want to see these institutions step in to defend, to cover their positions, to defend their castle. If this is their castle and they want to move down, they're going to defend it. And so what we can see specifically, all of this blue shading here, These are passive participants moving in to defend their position. And so we can see this aggressive pop up into this low volume area. And then you can see this extremely big positive delta here too, which means these buyers are feeding this price point here. And then you can see this big delta here, negative delta. And remember, delta is the difference between the bid and the ask. So if there was 100 contracts traded and the delta is positive 10, there were 10 more contracts buyers than sellers, right? So it's just showing you the excess of each side. So if there were more buyers than sellers, you would see a positive delta. If there were more sellers than buyers at a price point, there would be a negative delta. So it's just showing you who is in control of each price point, each price level. So we break down and create this low volume node, and then we move back up and we see orders loading up to defend their area. And if you would have seen us come into this 6670 level with this big positive delta, where you know that these buyers tend to step into the market here, and you would see them stepping in, adding to this positive delta, but not getting rewarded and getting absorbed by all of these participants here, you would be able to make the assumption that, oh, these buyers are not getting rewarded, these sellers are defending. And if you would have entered your position here, which there was plenty of time to see how much aggressive buying was trying to load up in this area, and they were getting unrewarded, you'd had plenty of time to catch this, and this thing ran down 15 points. 15 points is a solid trade. I could have taken that and been done for the day. That's not even a scalp. So then you could see a second time, you see these sellers reloading. Here's a second pop up into this area where the buyers previously failed. You would have been able to have one more opportunity to trade this setup, and this would have been another massive drop, like 20 plus points here from the 65s, 67s, all the way down to even lower, all the way down to the 43s. So that's over 20 points. So what I typically do, and what I'll do actually, is show you my playbook here. This is my playbook for my setup. So we've got number one, the profile analysis. I like to use VWAP and I like to use overnight low volume nodes. And I want to see both of those things align. For example, like I want to see, one of my rules is to trade only in the direction of the VWAP at the time. So when you see a low volume node, like a selling low volume node aligning with VWAP also going down, that's great context for me. So then that's the first whole profile analysis that I will do of like the volume profile. And then I'll do a setup analysis. So I'll see the profile and I say, okay, well, there's a potential setup. So I did my profile analysis and I'll move down into a setup analysis. I'll try to figure out like the setup that I want to trade. So we'll go into the setup analysis, clean low volume node on the profile, like we saw right here, like this low area of low volume, a low volume node created by big outliers. So like those big deltas I was talking about, like here and here and here. We want to see also this too, like these big massive sellers. Those are outliers. Those are massive bubbles. That stands out to me. I say, wow, that was a lot of aggressive selling. So that's an outlier in this chart. So another piece that I like to do is see a 15-minute candle close past the low volume node. And I don't typically use candlestick charts, but it's kind of just a little bit of a rule of thumb, I think. So like I would want to see this whole thing close in a span of 15 minutes before I attempted to use it for a trade, just so that I'm not getting in too early. And the next thing, like I said before, was trading in the direction of the VWAP. So for this particular setup, we would see a directional low volume node, so going down. And then I would also want to see the VWAP moving in the same direction. I would want to see a red VWAP by the time I'm ready to take the trade. And so when I say red VWAP on my chart here, you can see that the VWAP turns red. And so that's exactly what ended up happening. We were able to clear under this and the VWAP was able to turn red. So I'll either speculate a move to break through the VWAP, or I will just specifically wait for the VWAP to turn red and be in my direction. But most of the time I wait for the VWAP to be in my direction. And then I also want to see, I also only want to be buying at or below the POC and selling at or above the POC. So remember that area of value that I was talking about. I only want to buy the market and go long in the market when we are at the POC or below the POC. So we're getting a good deal. You're not going to buy your favorite car when it's most expensive. I'm not going to buy the market up here. I want to buy it when it's cheapest. So I'm going to buy it down here. And then vice versa with selling. I'm not going to sell this market until price is at its most expensive point. You're not going to sell your car when the price is, for your cars at its lowest. You want to wait until the car is trending, until it's popular. So I am going to only sell at the POC or above the POC, just giving me a better chance to have a good risk to reward, giving me a better chance to get this thing to run even further. So once I kind of build the whole setup, and you can pause this and read this, but moving on to my execution. So I've built my analysis for the profile. I've built my analysis for the setup. You're building a story. Then you want to move into your execution, right? So you want to see delivery back into the low volume node. Like we were talking about here, a pullback into it. We want to see these buyers just basically bring price back up to the defense, deliver it to the defense. And then you want to see signs of trapped participants plus absorption. So signs of trapped participants would be here and here, and also that big positive delta would show me that we are feeding a trapped area. And so we can even use this footprint chart to see at these, specifically if you wanted to take this trade, like at these 65s here, and you could see here we did use the VWAP. So you waited for the clearance below the VWAP, and then you were trading in the direction of the VWAP. So I was trading below the VWAP while it's red, getting short. And so you can see up here, like all these buyers in this area are failing. You've got big positive deltas here, big here, here, and here. 207 is big. So essentially you just want to see, and up here too, you just see these green rectangles, right? That they're getting fed, but not being rewarded. That's what you want to see. So back to the execution. Signs of big aggressive orders hitting the tape, which is great. So you want to see a lot of aggression, in the pullback, because aggressive pops up into absorption are a great sign. And so you also want to see, with that, signs of passive orders loading up in support of your direction. So the defense specifically is what's most important. You want to see things like these colors loading up, these passive orders here and here, all of this. You want to basically see people in support of your direction. You want to see the defense loading up, because without the defense loading up, it's not as strong, right? It kind of nullifies the idea of what we're looking for. Now, moving back, risk management while you're in it. I run a starter 3-point stop loss. I just find that works best for me. I reduce my risk to half at 1R in profit. I move to break even whenever I'm reduce risk to half at 1R in profit. That's right. So I always look for opportunities to reduce my risk. And then whenever I'm 2R, when I'm 2R, I move to break even. And then when I do move to break even, I put it 1 tick in profit. So no matter what, it's going to be technically a green trade. It supports my psychology. So move to 1R trailing past 2R profit. That's a good one too. So when I see that I'm really, really in profit, I don't want to just, take this thing at, so if I'm past 2R and I'm looking for 3 or 4R, at that point, I'm looking for like 9 to 12 points. I'm going to go ahead and secure a 1R. So at least I have a winning day on my account, like for prop firms. And that's essentially, I just try to keep it real basic. Let's see if we can see my, I know I have the notes for this thing too. And I just use this playbook thing as just kind of for this. I don't log as many trades as I should be into this, specifically into the playbook. I use the journal itself, but I need to be logging more of these trades. So same deal, just go over it one more time. You could pause this and read it yourself, but identify the setup, find a clean, low volume node on the profile, preferably one created by overnight imbalances or strong session moves. The best ones come from outliers, from outlier delta prints, like the really big ones, or heavy-sided participation, like we saw here. And you can pause this and read it. It's very simple to read. I won't read it again. But essentially, this is a great example of how I trade. So this is a trade that I would have taken. I did not trade today. I just opened the charts and I found this setup. But this is something that I would have taken a pop up into this aggressive move. And then you would have been able to trail this thing for 15, 20 points, which is massive. Or you could have just taken scalps and got base hits like 6 points. And you could have done it twice. So great example. But essentially, if you're not using order flow tools like this, you are seriously missing out in ways to be able to capitalize off of what's actually happening. I mean, once I started trading with order flow tools, I knew there was no way I could go back to just candlesticks. And I actually rarely look at candlesticks. I don't need to draw anything on candlesticks. I don't really look at it at all. You ask me like, oh, what time frame? Like, I don't use time frames. This is the way that I trade every single day. This is what makes me money in this market. And honestly, I definitely think it's worth learning all of it. I can look at my, I'll show you, this is really just it. These are the two softwares that I use. ATAS, this is the ATAS right here. I use the volume profile. And then I also use, and this is the VWAP. And then down here, I'll show you, down here, I use the RSI occasionally just to see when things are overbought or oversold, which could help me sometimes for reversal setups. And then I just look at the cumulative volume delta as well and kind of use that as a confluence to try to find like delta divergences too, which are super powerful. And you can see those same delta divergences here too. So like for example, let's see if we can find a delta divergence. Here's one right here. So the delta on the candle was positive, but the candle itself was red. It was negative, but that's just showing you like a divergence. So that's essentially it. These softwares and tools are very powerful. If you have any further questions, you can always ask the questions in the comments, or feel free to DM me on Instagram. But essentially, that's really going to be it from me. This is the way that I trade. And so I hope that that was helpful to anybody. Just wanted to go over my strategy, the low volume node strategy, the continuation of a low volume node. So let me know if you have any questions, and thank you for watching.